The Capital Market Authority followed with interest the discussions that were raised about the difficulty of rescheduling the loans of retired employees from the government units in accordance with the D1 directions that the regulatory legislations and in view of the importance that the insurance coverage represents on the lives of the borrowers and financing agencies. The authority, in coordination with the central bank, studied the possibility of providing sufficient facilities and flexibility for loans to Omani employees who were referred to retirement according to the D1 circular for at least 70% of the Omani employees working in government units whose service extended to 30 years. Therefore, the authority directed the insurance companies through a letter drawing towards extending the insurance cover to 70 years on the loans of those affected by the circular.
Based on the directives of His Majesty Sultan Haytham bin Tariq on the reforms pertaining to the retirement of civil government employees by end of this year, as expected that many of those referred to retirement will have credit obligation to banks in form of loans or banking facilities. The Capital Market Authority and the Central Bank of Oman have coordinated to find alternatives to facilitate the desired flexibility. In turn, CMA has collaborated with all insurance companies operating in Oman and agreed to extend the coverage for death cases and see the possibility to cover disability cases up to 70 years if needed.
It's worth mentioning that the insurance companies showed a positive response to the subject and expressed their agreement to cooperate and extend the insurance coverage for death and disability cases up to 70 years of age for borrowers, and the insurance companies agreed to take into account the borrowers when determining the value of the new insurance premium and not to charge them additional amounts or administrative fees. With regards to cases of individual documents, the letter stressed that extending insurance coverage to the retired category affected by the circular is not considered a new document if the value of the purpose is not increased, but rather it is treated as a cover extension transition or transactions only. The insurance coverage for the life of the lenders is considered an essential element to protect the client parties from the expected risks such as death or disability that hinders the borrower from working and providing the monthly installment and thus defaulting on the repayment of the loan, in addition to its importance for the financed institutions in wealth keepers and ensuring the sustainability of their activities.